Starting with a housing crisis, moving to the collapse of financial powerhouses such as Bear Stearns and Lehman Brothers, to the bailouts of companies deemed too big to fail, Treasury Secretary Timothy Geithner says the nation's financial system is in need of repair.
Over the past 18 months, we've faced the most severe global financial crisis in generations. Some of the world's largest institutions have failed. Confidence in the overall system has eroded dramatically.
Testifying on Capitol Hill for the second time this week, Secretary Geithner laid out a comprehensive list of reforms to prevent another financial collapse.
Not modest repairs at the margin, but new rules of the game. And the new rules must be simpler and more effectively enforced. They must produce a more stable system, one that protects consumers and investors.
The proposals represent a major expansion of federal authority and would give the government power to take over non-bank institutions such as AIG. The insurance giant sparked outrage last week when it was learned the company paid $165 million in bonuses after receiving more than $180 billion in government bailouts. Republican Congressman Spencer Backus says in hindsight, the government should have allowed AIG to fail.
Secretary Geithner, wouldn't a fair structure be not to prop them up with any taxpayer money?
Geithner said doing so would have caused more harm to an already fragile economy. Instead, Geithner proposed a systemic risk regulator that would monitor financial risks to big institutions. House Committee Chairman Barney Frank said he plans to move quickly on the measure to avoid more financial disruptions.
And the two glaring examples are Lehman Brothers, where nothing was done, and AIG, where everything was done. And I believe we are looking for an alternative method to avoid those two polar extremes.
Other proposals include requiring hedge funds to open their books to federal regulators. Hedge funds use large pools of capital to make speculative investments and operate largely outside government supervision. Hedge funds suffered big losses last year from investments tied to subprime mortgages. Mil Arcega, VOA News.